Let's take our conversation forward. Vishal Malkan joins us, and you've got Nooresh Merani. Nooresh, one step back but two steps forward. Surely, steadily and gradually, we are moving towards a new high.
Absolutely. So what we are seeing is the rotation continues, the strength continues in the broader markets as well. We are continuing to see Bank Nifty do well without HDFC Bank. We are seeing good momentum in the financial space. We are seeing new leadership come in. So we are seeing a breakout happening in IndusInd Bank. We are seeing RBL Bank, smaller financial names like Ujjivan, etc. So overall, the momentum is continuing across the board. And say as we get closer to 18,800, 900, I would expect more momentum to shift towards the mid cap and the small cap side of it. And overall, till the time we don't get a breakout in HDFC Bank or Reliance Industries in a big way, it would be tough to sustain 18,800, 900 levels. So at current levels, it's a time to be stock specific and continue to ride on to the move.
Right on the momentum, Vishal. Hi, this is Anisha joining in. Just wanted to get a sense from you about these two consumption names that have been on everyone's radar. ITC, which is at record high levels, and Indian Hotels too, which has surged as much as 20% this year itself. For those who have missed on to this rally so far, does it make sense to buy afresh?
Yeah, hi, good afternoon. I would say that both the stocks are in strong momentum. ITC has gone too far in terms of what we call the RSI levels on daily, weekly, and monthly charts. So we need to wait for a retracement. Maybe a 420 or a 410 would be a good price to enter. But Indian Hotels, I would say, is a good bet right now also because it's just got out of that 350, 360 mark, and there's a lot of potential on the upside. And of course, the sector is already buzzing in the last few days.
Okay, in the meantime, there are other counters which are buzzing as well. With respect to the result reactions coming in, you have TCI Express that just reported its numbers and EID Parry too, which is seeing a bit of a downtick. And talking about result reaction, you have Campus Activewear too, which is down about 6%. Rail Vikas Nigam is down 5%. So a lot of these counters are coming under pressure as well. But Vishal also wanted your take regarding some of these auto names. Of late, at least in the last 1 week or so, it's a bit sideways for the entire auto pack. Would you use this opportunity to buy any names?
Yeah, I think so because as Nikunj mentioned that it's basically sector rotation which is happening. The indices are not moving that fast, but they are maintaining. That's the main thing. They are maintaining the territory which is all-time high, which is a very good sign. So the sector rotation happens, and I think once they are sideways, that's actually an opportunity to enter. And my best pick for auto sector would be Bajaj Auto, which looks like a great buy on all three time frames, like daily, weekly, and monthly charts are showing good strength. And a 5,000 target is very likely in next couple of months maybe.
Just looking at some of the other buzzers as well in trade. So Apollo Hospitals, that's holding out in trade as we speak right now. There's PFC, there's MCX, HDFC AMC is holding out pretty well in trade. And then, of course, when you talk about some of the biggest movers, that's RBL Bank holding up nearly 6% in trade right now. And there's Oro Pharma, which has been sitting right on top from the word go with a nice solid 6% move is what you're seeing on Oro Pharma. Nooresh, on the charts, and especially how you are drawing out the construct amidst pharma, because when it comes to pharma, the clear favorites continue to be a DRL or Cipla, or for that matter, Sun Pharma as well. But Oro Pharma, the beaten down underperformer, do you think it can attempt to come back?
So what we have seen over the last 1 month, 1.5 months in the pharma pack is the beaten out names have done better. So whether it is in the small cap space or in the mid cap space. So if we look at, say, what happened with the Aurobindo Pharma, we've seen a Glenmark Pharma which has done nothing for a long period of time. That stock is also up 50% from the lows. We are seeing a Lupin which has been down from 2015, making a breakout and a 1-year high. So out here in pharma, we are seeing more preference towards the mid cap, small cap, beaten down names in the pharma pack rather than the heavyweights like Dr. Reddy's and Sun Pharma and Cipla. Those three names have just been able to hold on to their breakouts and say the longer term breakout points, but there is no momentum. So out here we are seeing a recovery in the major of the mid cap and the small cap space. So if one wants to look at pharma, one has to go a little more on the lower side of the market caps and stocks which are fallen 30, 40, 50% from the top. So that is where Natco Pharma seems to be bottoming out. We are seeing a Laurus bottom out around 300, 330 levels. Lupin could be a stock which could surprise on the upside because finally the stock has crossed that 800 mark, which was a problem. So out here, focus more on the mid cap and the small cap pharma names rather than the large cap names.
Couple of other, stocks which are in focus right now. Metals at large is a little bit at bay today. So be it Nalco, Hindalco, both those stocks are down. There's Tata Steel as well, which is lower by about almost 1% in trade. And then, of course, within the Nifty, there are other names like an L&T, Adani Enterprises, TechM, for instance, ONGC after that big knee-jerk reaction that you saw in the stock yesterday after its numbers disappointed. Remember, it was a big drag yesterday, and today it's seeing a bit of a recovery, or at least it's not falling as much as it did yesterday. HDFC, Bajaj Auto as well are a little bit on the sidelines. Interesting to note that some of the auto majors are the ones which are actually drags today. So Tata Motors, Bajaj Auto, Eicher, even M&M, the big winner from yesterday, that's not doing a whole lot. It's much sitting at on the sidelines. But Vishal, just wanted your own perspective on how you're reading into the moves in auto.
Auto, I think, as I already mentioned, they are getting into a sideways consolidation in the last few days, and it's a great opportunity to get into a couple of stocks which are looking really good on the charts. One of them is definitely Bajaj Auto, as I mentioned, and the second would be Apollo Tyres, which I think is doing great on charts on all-time high levels. So Apollo Tyres with a stop of 370 looks good for a target of 430 in the next couple of months.
On auto was just marking down those stocks. In the meantime, let's just see what Jubilant Pharma is currently, doing in trade, and that's really getting battered down, like we just highlighted. Weak numbers, debt levels have risen. In fact, we're going to get in our research analyst as well to perhaps try and analyze as to why is it that you're seeing such incessant weakness on the stock. There are, of course, management changes as well, but it's been under the US FDA scanner, and that's really not auguring well for the stock price sentiment right now. 333 is where that stock is currently in trade as we speak right now. But just looking at what the IT pack as well is doing, because that definitely is holding out a lot better than some of the other key sectors. So HCL Technologies, Wipro, Infosys, etc. They continue to hold out. But on the other hand, you've got a TechM, which is not. I don't know if we can bring out some of the market perspective and the views and opinions we've got of late on IT as a sector. In fact, we had some views coming in from Sunil Singhania as well as Prashant Jain, highlighting what they make of IT and whether or not IT has rebounded off late or not, given that IT is one sector which has definitely seen a consistent 4-week recovery play out. We will try and get that soundbite up for you in just a short while from now. But Nooresh, your thoughts on IT and whether Nifty IT can continue this spate of recovery that it's been on for the last 4 weeks? Okay, Vinkesh, your thoughts on IT? Okay, we will talk autos now, and I'm going to bring on board Vinkesh Gulati to talk about what he's making of auto right now. Vinkesh, apologies, got a little, miscommunication there. But soon we'll have the monthly sales data trickle in for autos. Help us understand what is it that you're mapping in terms of what could deliver, what would not?
Thank you. Thanks for having me. Giving the data 2 days before, it's a bit difficult, but yes, I can give you the sentiments. Overall, the sentiments in the market is still positive, and across all segments, we see that year on year, the figures should be in positive. The retails are happening, and the supply issues which had been before in the cars are now seeing a bit of better position than before. Market is positive, and even two-wheeler as of today is seeing a good jump due to the marriage season, what is going around in the North India, because two-wheeler is the sales see a big jump. And if I talk about other categories like commercial vehicle, yes, there is a bit of a challenge which is being seen today, but I am hopeful that it will be covered up. So maybe year on year, even commercial vehicle may see a positive thing, but a challenge is started seeing. And overall, the market in auto as of now is positive. So don't see a problem today. The marriage season, like I told, will still continue in June. So hoping that that will also help the coming months to be in positive because of that.
The data what we are getting from auto companies seems to be pointing something else. They are telling us semiconductor problem is over, demand is coming back, inflationary issues are behind them.
So thanks, Nikunj, for that question, because that is where FADA comes in. There is one story which comes from the OEM, the other story which normally FADA gives, which is the ground reality. And we actually give what sentiments we are looking at the customers and all. So no doubt semiconductor story is behind us, but it is behind us to the level where the optimum production capacity was there. And still there is a gap between in the demand and the booking as of today, or the supply and the demand as of now for some models, which was a year back, it was a major issue because 80% models were on waiting period. But today, I feel every OEM has only 1 or 2 models which are on waiting period, or whatever the latest launches had been. So semiconductor issues are still prevalent wherever the production capacity is increasing to cover up the backlog demand. But overall, practically, we have now reached at least 3 lakh plus retail and 3 lakh plus production for the past 8 to 9 months, which has been the ever highest in the car industry of late. But yes, the gap is still there because the bookings are very high. You just heard about Mahindra, where they said some big numbers of 3 lakh plus where the bookings are pending. Even whenever you talk to Maruti, they talk about 4 lakh plus booking. But that's not what monthly sale is. It means that the production capacity, if improved more, will see more retails happening. But overall, the things are positive, and if production is improved, there is still a market.
On that note, we'll let you go. Thank you so much for joining us today. But we'll sip into a very short break. But as we do that, listen into the management bites coming in from the management of PB Fintech, talking about how they'll log a profit of almost 1,000 crores, and also the word coming in from Sober Industries because the entire real estate pack is quite active.
It is a seasonal industry, so you will always have a Q4 which is quite strong, but one has to look at Q4 over Q4. So I would say when you look at Q4 over Q4, the abnormal numbers were about $2 million of EBITDA. The only guidance we gave was on our 27 numbers, and if you notice, we haven't given any further guidance either positively or negatively. So we will stick with that, and let's hope we do better than it. The statement we made was that, look, this will not just be profitable, it will make 1,000 crore profit, give it a few years, and we gave a time frame of 27. So I think next year we should put in substantial cash. I think last quarter also we put in a lot of cash into the company. So if you notice, our cash balance is pretty much the same as it was on IPO day. So we've not been burning cash. From a cash flow perspective, we are pretty much where we were.
Vinod Karki, Head of Strategy with ICICI Security, joins us. Let's connect with him to understand what he makes of the current market. So Vinod, we are up 22,000 points on the Nifty. Do you think markets now are looking bloated and they're due for a correction, or this party will continue?
Hi, Nikunj. I think this fast rally, if you may call it, from 17,000 till now, was mostly to do with what happened in March when the banking crisis started there in the US, and that kind of created an environment where people thought that domestic demand and overall demand will take a big hit. But if you look at the numbers, the high frequency data, that has not happened. In fact, relative to other economies which were really gaining traction prior to this, like China and Taiwan, they have started to fizzle out, and our fundamentals are looking better, in fact. So I think all this is resulting in this outperformance. which I think is based on the underlying trend. If you see in the GDP expansion, is driven by the investment cycle, the real estate cycle, the credit cycle, and also the profit upcycle. So I think this will continue, although I would say that valuations are now getting richer, which should which should limit returns from here on. That's the view, but I don't see any reason why the market should correct big time, because our observation all along has been that the underlying themes within the economy, domestic economy, were quite strong. Only the external sector was looking a little worrisome due to these banking crises. But even from markets like US and all, the underlying economy is not getting into that recession that people have been expecting for almost a year now. It is still resilient. So let's see how it pans out. But the external sector seems to be the biggest risk, while domestic investment cycle and credit cycle driven stocks should do much better.
Just wanted to flag out the flashes running for you at the bottom of the screen, talking about how India may cut solar panel import tax. It's likely to get halved to 20% versus 40% earlier, and that's the reaction you are seeing on Sterling and Wilson Solar. That stock has spiked as much as 6% as we speak. But coming back to our discussion, Vinod, one space that you've been very positive about has been real estate as well. What are the top bets there? What's the thesis with respect to real estate demand continuing despite the interest rate hikes that we have seen?
Yeah, for us, real estate is larger. So if you look at the breakup of the investment cycle, and that's what we have been talking about in our reports also, that the previous peak of the investment cycle was around 11-12. And if you just break it up, the gross fixed capital formation, almost 37% of the contribution was from real estate investments by households, basically. And that 37% till about 21 dropped to close to 25% odd. And as of now, if you see post-pandemic recovery in the economy, the GDP expansion has been led by gross fixed capital formation. But what people forget to see that if you break it up, the institution-wise, only two major institutions have been driving it up. One is the government, the central government capex. And the second one is real estate investments. We know that corporate capex has been slow, although it's bottoming out, but it's not really picking up to the extent we would have wanted it. But since the overall gross fixed capital formation is leading investment, the overall GDP growth, then obviously these two are driving this thing. So in the real estate for us is more to do with the overall income growth in the economy, because it's the second largest employer in the economy after agriculture, especially in the unorganized and informal segment. And there are a lot of allied activities, manufacturing activities, which are connected to real estate, which again, get benefit when the real estate cycle picks up. And we have seen this example of China and other countries where the real estate cycle has picked up, and it has really moved the entire lot of allied manufacturing activities. So I think that's the bigger theme for us. We have mentioned some of the real estate companies also, but it also moves the mortgage demand, the overall credit cycle, manufacturing, job income growth, and all that basically. So it's a big stimulus for the overall economy.
Okay, the transition's finally here. At CEO, Rajesh Gopinathan, the outgoing CEO, has written a note to the employees before he hands over the baton on June 1st. Anisha, what's the letter reading like? Is it emotional?
It's a bit emotional because he's been a lifer at TCS, right? So obviously after 20 plus years, he's stepping out of TCS. So of course, a bit of a emotional, touch coming in there. But nonetheless, even if you look at the numbers, it backs the performance, right? Of course, he's talked about how he's wishing Kriti the very best as he charts on the way. They're very confident of reaching that $50 billion mark as far as the company's revenue is concerned. He says that the company's best days are going to be, are going to come going forward. So the best is not over yet. They're watching out for those days as well. And in the world of AI and automation, he says that TCS has always remained, managed to stand out given the fact that they have been very nimble, etc. In fact, if you look at the data as well, under his helm, the company managed to add almost $69 billion worth of market capitalization. It, of course, stands at around $143 billion now. So quite a bit of addition there. 200,000 worth of crores paid out as dividends as well as buyback. They've added almost 60 customers in the $100 million range as well. Cash conversion has been solid under his, leadership as well. So, of course, quite a bit of improvement that we have seen. But he leaves the, company in a very rocky stage when the macroeconomics are posing as a bit of a headwind for the entire sector. So, Vishal, Mr. Karki, in context of that, what's your take on IT as a sector? And if at all you had to take top bets, what would those be?
Yeah, so IT has corrected quite a bit, and it is getting into an interesting zone. But our experience with equities has been that valuation seldom results in outperformance. It's only the excitement around growth. And when you start seeing growth upsides, growth surprises, and even if things are expensive, they keep outperforming. So from a near-term outperformance perspective, unless you see a reversal in growth, and the growth, factors will only be, you will only be able to gauge growth when they start hiring. So the hiring numbers and the outlook in terms of growth, if you start seeing upgrades there, then from a outperformance, but if you were to just look at from a valuation perspective, long-term perspective, things are starting to get better here. But as I said, equities seldom work on something getting cheap in the short term, obviously. So unless you have growth catalysts for IT sector coming in, it will be very difficult for these companies to outperform. The valuation also has not become so cheap that it's below long-term average. It's still around that or a little above average kind of number.
Do you think best of the gains in banks are over? Credit cycle is almost midway. NIMs are not going to expand now. If at all, slowdown, I think, is there in a lot of big sectors like power, steel. Do you think one should lock some gains in banks?
So I think credit cycle, if I look at from a corporate releveraging cycle, I don't think it has even started. So retail has been sustained growth, so that's fine. But from a corporate releveraging or an NPA cycle, so as per RBI statistics, we are going to form a bottom in the NPA in this year, 24. So the NPA cycle is just bottoming out, while the corporate releveraging cycle hasn't even started. And that is where the whole deep cyclicality comes in, because the retail is not deep cyclical. It is more of sustainable growth, if you may call it. It continues with its robust growth. So from a cyclicality perspective, I wouldn't say that the credit growth cycle has kind of peaked out to any extent. From a corporate side, I don't think it has even started properly. So I think there's lot of runway there in terms of corporate credit cycle, and NPA cycle is just about finished. So I think it's a much longer story, I would say, the credit cycle thing. So banks, so you will have phases where they run up quite a bit, outperform, and then take a step back. But from a medium-term perspective, I think the credit cycle has a lot of legs to go.
Appreciate your time. Glad you could join us. Let's take a break with a intraday graph and a 3-month chart of Aurobindo Pharma. Nobody likes it, but this stock, in a sense, has been the toast of the town. Sub 400 for Aurobindo Pharma has now become 650 plus. That's from 1st of March, but if you stretch it slightly more, actually it's going to be sub like 390 or 380 thereabouts. There you go, almost 400, just below 400, there you go. So it's like 400 becoming 650, 40% higher in just 6 months. That's Aurobindo Pharma for you. Everybody was on the same side of the board that they will never ever deliver. And when there's too much of pessimism, that's the time the sector bottoms out. Is pharma one of those sectors which will surprise us by the time the year ends? So far there is evidence of comeback in Aurobindo, Lupin, even Gland Pharma. These were like the real beaten down stocks within the pharma space. So pharma was beaten down. Within pharma, Aurobindo Pharma, Lupin and Glen Pharma were the worst hit. And this entire worst lot, so to speak, has come back. Gland Pharma yet to come back. I think numbers continue to deteriorate. But till the time numbers will not stabilize, I don't think Gland will come back. That's Gland Pharma for you, 40% higher. Let's take a break. We'll continue our conversation with our technical expert.